Okay, hey everybody. So we have Topeka here, and Topeka took her pre-license life and health exam,
Life.
life exam in Texas, and she was not able to pass. Totally okay. Most people actually don't pass on their first time taking the exam. So we're gonna here today figure out some of her study techniques that have helped their studies so far, and also try to take a look at what can help her pass the exam this next time that she goes to take it. So, Topeka, without further ado, if you want to share a little bit about your study experience and what helped you pass and maybe some challenges you ran into.
Okay, so I first started with trying to read the life insurance book from front to back. And I read it three
Mm-hmm.
times, but I wasn't really grasping the information. So then I tried taking a bunch of practice exams and making flashcards, and that helped. And then I actually started watching your videos and taking notes. And
Okay.
yeah, that's pretty much where I'm at.
Okay. Cool. Which course did you take?
What do you mean, which course?
Like,
Oh, are you talking about the life course?
yeah, yeah.
I was going through Primerica,
Okay.
and I was taking their course.
Okay. So Primerica has their own course.
Yes.
Okay. Awesome. So, when you took the exam, what was like, um, so far in your studying, what's been like one of the most challenging things for you?
Probably, I would say the annuities.
Okay.
Trying to remember that. I noticed that was a lot of the tests. I struggled with that. Like when I'm watching your videos, I could tell I got majority of those wrong over annuities.
Okay, yeah. Annuities are they're complicated, but once you get them down, they're kind of straightforward. So, um, there's fixed annuities and variable annuities. There's immediate annuities and deferred annuities. So, when you're did you happen to get a printout that showed you what ones you got wrong?
Yeah, I just got like like which section I got wrong, and I think I did the worst on that one.
Okay, so basically, annuities are a way for someone to take a bunch of money and make sure that they don't outlive it, or that it provides them an income stream. So it's a way to liquidate an estate or to disperse money. So think about like if someone wins the lottery, right? They can either get a lump sum ahead of time, or they can get payments for a certain amount of time, or for the rest of their life. They can get payments of a certain size. Okay, so that's kind of how it's um, life insurance creates an estate, an annuity liquidates an estate. By liquidate, I mean it helps disperse the money. A lot of people will get them when they retire, because say they retire with $1 million in their 401k, and they're like, well, this is all I got for savings. I don't want to outlive it, right? $1 million sounds like a lot of money, but if you retire at 65 and you're going to live 30 years, it's not that much money, right? So people will say, well, I don't want to outlive this money, and I don't want to have the danger of just dipping in and spending a bunch of money on something I don't need. So they'll put it into an annuity that will give them a payment every month for they can have it for the rest of their life, or certain options in there to receive the money. Now, for annuities, what part of it do you feel is the most confusing for you? Is it like how they pay out, or how they're built up, or the
Uh,
different options?
it's really the whole thing. I'm not really able to grasp, but it's more so the payout.
Okay, so the different payout options. So I'm going to go into some study guides I have. This is actually out of a course. I built a course to help people pass their exam. So I built a pre-licensed course, just like um, Primerica has theirs. So I'm going to show you some of the notes from the one I have. And then there's a ton of videos. This is just the text material, but I have a ton of videos to go along with all these. And actually, if you look at my most recent video, it's I just posted. It's the life insurance exam vocabulary master guide, or master class, or whatever. It's a 5-hour video. It covers all the basic general terms you need to know. But basically, for an annuity, there's different options. So first, there's an accumulation period. Do you know what the accumulation phase is, or accumulation period?
Not off the top of my head, no.
It's okay. So what does accumulate mean to you?
Um, to get more of?
So to build up. Okay. So what we want to look at too, something that can really help, is knowing the definition of words, exactly what it is. Because we think we know exactly what it is, but sometimes there's words we may not exactly know. So if we look at accumulation, it's the acquisition or gradual gathering of something. Okay. A mass or quantity of something that has gradually gathered or been acquired. So it's the gradual growth of something. Now, the accumulation phase in an annuity can be very short, which is the case for an immediate annuity. So in an immediate annuity, I'm going to run a whiteboard here from Canva, but let me just let this load and then you'll be able to see. Okay. So the way it works is we have, say we got John here. He's happy because he's retiring. Okay. He's got a bunch of money and he's got $1 million, 1 mil in his 401k. Okay. Or his retirement plan or savings or whatever. So he's retiring with that much money. Now, he could just put it in a bank account, right? He could put it in a bank account, but what he might want to do is take this money and put it into an annuity. Now, what this will help him do is liquidate the money over time. Okay. So he says, I want to put this money somewhere where I cannot outlive it. Because if he has just this $1 million in an account, he has to worry about spending too much. Or what if he spends too much and he outlives it? What's he going to do? Does that make sense?
Mm-hmm.
So he might be concerned about that. So we can use ChatGPT to help too. And this will help. This might help us understand it too. But give me an example of how an immediate fixed annuity works for someone who is retiring with 1 million and wants payments for life. This person is a 65-year-old male. Okay, so essentially what he does is he gives the life insurance company a bunch of money, and they figure how long they think he'll live, and then they say, based on that, we're going to give you this much money a month from that. If you live, if he lives 40 years, then he's making out. If he dies too early, then the insurance company made out. Does that make sense? So he's gambling against his life. Pretty good incentive to eat healthy. So John, a 65-year-old male, decides to retire with $1 million. He wants a stable, guaranteed income for life, so he purchases an immediate fixed annuity with the entire amount because he wants guaranteed income for life. So fixed is guaranteed. Okay, guaranteed. An annuity with a life income option provides guaranteed income for life. Now, fixed annuity, he probably wouldn't do variable annuity. Do you know what a variable annuity is based on?
No, you have to go over that.
That's okay. So with the fixed annuity, he gives the $1 million to the insurance company. And with a fixed annuity, they invest it in that money is earning interest in the company's general account. So essentially, the insurance company makes conservative investments that aren't risky to ensure the long-term growth of the company and that it's safe and stable. Now, if it's a variable annuity, that money might be invested in stocks and mutual funds and stuff like that, which are risky, right? Do you know how how stocks can go up and down in price?
Yes.
So if someone retires, he most likely doesn't want to take that chance that all his money could be cut in half overnight, right? Maybe he could have taken that chance when he was younger, but not now. So example, lump sum investment. John gives $1 million to an insurance company. Any questions about that? Okay. Income payments. In return, the insurance company agrees to pay John a fixed amount every month or year. So it's either once a month or once a year for the rest of his life, starting immediately after the purchase. So he's like, here's the money. They say, here's your first payment. Make sense?
Mm-hmm.
Okay. He's essentially giving his money to his parents to say, that's the analogy. Like if you got a bunch of money and you're a kid, you give it to your parents so that you don't go spend it all at once. They give you a little bit at a time. Monthly payment example. Based on current rates for a 65-year-old male, let's assume the insurer offers a 5% payout rate. So the insurance company. This means John could receive approximately $50,000 per year, 5% of $1 million for life. Dividing this by 12 months, John would get around $4,167 a month. John continues to receive these fixed payments for the rest of his life. If he lives for 20 years, he would have received $1 million in total payments. If he lives longer, he will receive the $50,000 per year as long as he lives. Okay? Does that make sense?
Mm-hmm. Yes.
But if he dies beforehand, the insurance company keeps it, unless there are some of those other options that are talked about in the annuity section, which I'll get into in a minute. So key features, guaranteed income. John's income will not change regardless of how long he lives or how financial markets perform. So the stock market could crash next year. We could go into a recession and he would still get the same amount of money. Does that make sense? No investment risk. We just talked about that, but he can't access the money. So the $1 million is no longer accessible once it's used to buy the annuity. He can't withdraw money after the purchase, so he can't go back on it. Okay. So some examples of the different payout options in an annuity. So there's the life only. Okay. That's the one that we just talked about, right? So this option pays a guaranteed income for the rest of the annuitant's life. Payments stop upon the annuitant's death, regardless of how many payments have been made. Example, a 65-year-old retiree receives a monthly payment for life. Okay, so they get a payment for the rest of their life. If they pass away after 10 years, no further payments are made, even if the original investment has not been fully paid out. Okay, so say John lives for 10 years, only $500,000 paid out. The life insurance company keeps the other $500,000. Does that make sense?
Yes, that makes sense.
Okay. This is best for people looking for the highest possible monthly income, and they're not concerned about leaving money behind to anybody. Because he's taking the gamble, the biggest gamble, saying, hey, I'm going to outlive that. Okay, now, if there was money left behind, then his monthly payment would be lower because the insurance company is taking a bigger chance that they're going to have to make payments for longer. Does that make sense?
Yeah, there's.
So if he's like, when I die, I want the money to continue to someone else for a certain amount of time, then the insurance company says, well, now we're going to spend more money. So that's life with period certain. Here's another one. This provides income for life, but guarantees payments for a specific period, such as 10 or 20 years. If the annuitant is the person receiving the money, okay? A lot of these things, Topeka, is just, am I pronouncing your name right?
Yes.
Okay. It's just going to be with knowing the definitions of these different things. So if he dies before the period ends, the beneficiary will receive the payments for the remainder of the guaranteed period. Example, a retiree chooses life with 10 years certain. If they pass away after 5 years, their beneficiary will continue to receive payments for the remaining 5 years. Best for people who want a lifetime income but also want to ensure payments go to their beneficiaries for a minimum period. What type of situation do you think that would be helpful in?
To only receive it for the next 5 years, or?
So for example, I'll give you an example. Say a guy retires at 65 and his wife is 65 too, whatever. Husband and wife both retire at 65. And they take their money and they put it into an annuity. They both pull their money together and put it into an annuity, right? And they're like, we want this certain amount of money for the rest of our lives. But if say the guy is the one who is insured, right? He's the annuitant, not insured, but he's the one who's the annuitant. he wants to make sure that, hey, if I we're 65, we're probably going to live till we're 85 or 90. I don't want to die in 10 years and then have my wife not get any more payments, right? So in that case, he'd say, oh, maybe I'd want like a 25-year period certain, right? Or like a 25-year certain. So, hey, at least until 90 or 95. Or that would be like a joint and survivor annuity where it will guarantee income to the survivor, to the spouse. So in a joint and survivor annuity, the surviving spouse continues to receive payments either in full or at a reduced percentage. So either 50%, 66%, or 100%, just an example of the original payment. Does that make sense?
Mm-hmm. And is that when the first person dies, or what? I might be getting mixed up.
That's okay. So there's joint life insurance, and then joint and survivor life insurance, or survivorship life insurance. For a joint life insurance, it's if one person dies, then the benefit pays out in full. For the survivor life insurance, both people have to die for the benefit to pay out. Okay. But for joint and survivor annuity, it's just one person dies, the next person receives the money. Okay. So does that make sense?
Yes, it does.
Okay. Then there's also period certain. So this guarantees payments for a specific number of years. If they die in that period, the payments continue to the beneficiary. So a 20-year period certain will pay income for 20 years, whether the annuitant lives or dies. So period certain is a little different. Instead of the one before where he says, I want money for the rest of my life, he says, I want payments for the 20 years. I need payments for 20 years. I want this broken up into payments for the next 20 years. After that, it's done. Does that make sense?
Yes.
And if he dies within that time, then the money still continues to someone else, okay? Because that's not life with period certain. If it was life with period certain, that means, hey, there's money for a specific period of time, guaranteed, but then also if I live, I'm getting it for the rest of my life. Period certain is just like in that amount of time. The money's going to pay out in full, okay? Lump sum payment. Rather than receiving periodic payments, the annuitant can choose to receive the entire annuity value in one lump sum.
So that's one pay. So that's one payment, or
yeah, but that's rare. That usually doesn't happen a lot.
Okay.
And then fixed amount. This is where they're saying, hey, here's $1 million. I want $2,000 per month for as long as you can give me it. So fixed amount is where they're going to get a they want to control their income. They're not looking for lifetime income, but they're like, hey, I need this amount of money a month for however long you'll be able to pay that out for. Does that make sense?
Yes, it does.
Okay. And then fixed period certain, same thing. Payments stop at the end of the period, even if the annuitant's alive. There's life with refund, cash refund. So this is if the total amount paid to the annuitant doesn't equal the premium paid, the difference is refunded to beneficiary, either in a lump sum or installment. So this is the one where, say, he puts in $1 million and the annuity pays him out $500,000 and he dies, then the beneficiary can receive the difference, the $500,000 difference of what wasn't paid out.
Mm-hmm.
Okay. So just some things that you want for the annuities. Check out some of the videos I have. Check out other videos. Use ChatGPT to ask for examples to help paint a picture for you. That can help. That can really help. Anything else you can think of that was confusing on the exam?
So with me going through Primerica, would it, like, if I wanted to go under you, would it still be the same, or how does that work?
So it doesn't matter who you get your license with or your course with. As long as you get your license, then you can do whatever you want. So the way that we operate here is we're a little different. We're heavy sales focused, so we're not really focused as much on recruiting. And we provide you we provide you all the leads you need, so you don't have to sell to family or friends or anything like that. We run ads online for people who are looking for life insurance, and then we give them to our agents, their name and number. They call them. We bring them through a script, and we have full training, and we have someone who jumps in on your calls and helps you with the sales and everything else. So in terms of contracting and getting started, it's really easy. You just fill out some paperwork through portals online. That's all.
Okay.
So
And I've been watching all of your videos, so if I go through all of them, it should it should help me pass the test.
yeah, it should definitely help you pass the test.
Okay.
So how long have you been studying the one that you're in now?
Primerica.
Yeah.
I would say probably about a month and a half. I've been
Okay.
studying.
All
I
right. So
took
what I'm gonna
I took my test about 2 weeks ago, and I missed this week because I wanted to get more studying in. So.
yeah. So how about I do this? Normally it's $297 for my course because I give a money back guarantee that if someone takes it and doesn't pass, then
Mm-hmm.
then I give them the money back. But I'll enroll you in it for free for taking the time today, and
Mm-hmm.
you can go through it and if there's anything that you feel like is confusing to you, let me know, and I can talk to you about it. But it might help you given a different perspective. I have chapters on everything, videos on everything that come up at the end. It's just a really big video module,
Mm-hmm.
and then um, practice exams, practice quizzes, everything else. But I tried to make it a little easier to understand compared to a lot of other stuff out there. So if you want, I can enroll you in that, and you can go through and check out the different parts that you feel it could help you. It's basically for each topic. There's a slideshow, videos, practice exams, and study guides, vocabulary study guides, and review notes. And then at
Mm-hmm.
the end, after you finish the main course, there's more practice exams and then a huge video course that opens up and some flashcards and stuff like that. So would you want me
Okay.
to enroll you in that?
Yes, please.
Okay, cool. I'll do that right now. What else did you score low on?
I wish I had the paper with. I wish I had the paper with me. I could look at. Let me look at the book right now because I can go if I look at the chapters. Actually, I have it right here. Policy riders and provisions.
Okay, yeah, I have a really good chapter. My course, I think anyway. Obviously, I'm biased because I made it, but I think that our chapters on the policy riders are huge. Riders are confusing. Look at them as like if you bought a suit, right? And then you buy a tie. That the rider is the tie. The suit's the policy, the rider's the tie. It's just an extra little attachment to it.
Yeah, I think that's the one I got the lowest in actually.
Okay. What percentage did you score on the annuities, and how many questions were there?
They don't really tell us all of that. They just kind of. I don't. They just kind of do this with it. I don't know if you can see that.
Yeah, it's like a bar graph. So
Yeah.
I can tell you exactly. Have you looked up the Texas Life and Health or the Texas Life Insurance exam content outline? In my course, I have for Texas. I'm adding this for every state, but I break down the whole course outline as well, the exam. So I'm going to show you this here. I have this in the course, but here, if you want to. So this is the candidate hand. Is this it? Yep. Okay. So this is the life general knowledge content outline. So there's 15 questions on the types of policies and annuities. So the most questions that there could ever possibly be on annuities is 15.
Mm-hmm.
But included in that 15 questions are life insurance policies. So term life, interest sensitive, market adjustable products, universal life, whole life, and combination plans. Joint life, first to die, survivorship life, second to die. So, and then annuities, right? So there's and then there's a big thing on riders, options, and exclusions. So if you see that there's the same amount of questions on riders, options, and exclusions, right? It's 15. So essentially, what I teach you in the course and what I do for the outline is just to when I was creating the course material and the questions for the course, I went through each of these to make sure that we covered them all and that there's practice questions for everything. And then you'll see here there's state specific. So there's actually 30 state specific questions too. So a big percentage of the exam are state laws, which I have all that stuff, but it's, that stuff's annoying. So So yeah, so what I'm going to do here is I'll get you enrolled. I'll go through your email. What any other questions on things that were confusing to you on it?
Not at the moment. I'm still kind of going through everything, and then I'll quiz myself and see. Right now, I've just been taking notes and watching your videos. So
Okay.
I'll go back and see, like, okay, I'm still not having an understanding in this. But everything, like, when I'm watching your videos, I took my test and I'm watching your videos, like, I can remember, like, I got that question wrong on the test.
Yep. Yeah. But that's good though. That's part of learning, right? So that's good. That's good. It's good that you're understanding that. I'm going to, okay, I'm adding you to Life Insurance Texas here. So it's your username is going to be your email, and then your password is just insurance1 with a capital I, and then the number 1. Okay.
You said insurance.
One capital, yeah, insurance1 with a capital I. Do you have a computer that you can study off of?
Yes. Yeah, I have my
Okay.
my MacBook. Insurance one with, is that it?
Yep, just insurance1 capital I. You might have to make your own password after.
Okay.
Awesome. But yeah, so cool. Any other questions for me about? Well, here, this is what you can do. So you're going to go through that course, and you'll go through each part. And what you really want to do is hone in on the modules and chapters on your exam that the results. It's going to show you where you didn't do well, where you did do well, where you didn't do well. You don't want to neglect the areas that you didn't do well on, or that you did well on, but also you really want to hone in on those areas that you didn't do well on, and read those chapters, watch those videos, like you've already been doing. All right. But there it'll be organized, and there's slideshows and other stuff that can help. Okay.
Okay.
Awesome. What was your total score?
It was a 50.
Okay. So you are more than halfway where you need to be to pass, because you only need a 70 to pass, right?
Mm-hmm.
Okay. So you're not that far away. Just touching up on those provisions and the annuities, getting that stuff down will definitely get you into the 60s. Okay. And then so the annuities, the riders, options, and provisions, what else was a challenge?
Well, it looks like I didn't do too well in completing the application underwriting, and then retirement is right around the same thing. Like, I kind of did bad on all of those. The other three I did okay on.
Okay, good job. So the delivering the application, underwriting, and policy stuff like that, that's 12 questions. The retirement and other concepts, like Social Security, it's only 8 questions out of the 50. So the biggest ones to know are the types of policies, the riders, and then completing the application, underwriting, and delivering the policies. Okay, those are like the biggest percent. I'm also you'll see this at the end when you get through all the material in the course, but I'm gonna email you this state exam outline now. You'll just scroll down to the Texas Life specific, and you'll see on there. Okay.
Okay.
Awesome. Well, I hope that you pass this next time around, and I think you'll get it. Just go through, take those practice exams I have. If you can get like 85% or higher on all of them, then you should pass the final exam. We try to structure it after the real exam as much as possible, but they don't really give out they don't really give out their questions, right? So we have to just look at what's been in the past and then structure them after that, and go through it like that. So Topeka, thank you so much. I appreciate you. And if anybody want to watch the next video coming up, you're going to learn how Tasia passed her insurance exam in South Carolina. And South Carolina has has similarities to every other exam that's out there. Thank you, guys. Okay.